India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. This is an important week. We're kicking this off this Monday. It's the budget week. Tomorrow, of course, is the union budget, and I think all eyes on it in terms of what it sort of gets us our way. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. It's so hard to keep up with all the events, right? I mean, when the Microsoft outage happened, I thought that was the only historic event we'll have to report. But lo and behold, in 24 hours, President Joe Biden has now dropped out of the presidential race. So we really have our hands full in terms of cues.
Well, that's right. We have big results as well, earnings reactions. And the regulators, well, they're making their stance quite clear with regard to the market. So we'll have to analyze that as well.
Absolutely. That outage was quite something. I was actually on a flight and it just was crazy. I mean,
cybersecurity has now become the hottest topic that everyone's talking about, right?
Absolutely.
It's unnerving. So that's the only way to put it.
Absolutely. And, we'll talk more about that one because it's got implications, of course, over a sort of longer time scale, and companies have are taking notice as we speak. But let's get it back to the market now, right? Because, I mean, that's what we do right as we kick off the show. Friday was a bad session. Friday, broader markets sold off hard. And I remember saying this in the morning on Friday, that Infosys, no Infosys. You basically have the market which is looking a little iffy, looking a little jittery. Infosys was up 2%, 3% off the day's high, but the rest of the market just completely collapsed. So broader market especially got hammered. The mid and small cap indices were down over 2%. It was a combination. Global cues had been weak the last 2 days. There was, of course, overextended positioning, so there was profit booking in that sense. And, of course, a little bit of pre-budget nerves, which I think are starting to build in. And that's natural because markets have done extremely well. We're up about 12% on the Nifty, even after Friday's fall from the June 4th close, which is the election day close. 12%. And, small mid caps are up 14, small caps are up 17, 18% since then. And you're kind of going into a big event, which is the budget. Even though people may say, well, importance of budgets have come off, and that's true. But markets react to incremental change, and in that sense, it is important. Rupee also, by the way, traded at a new all-time low against the US dollar on Friday. I mean, both in the India session and in the NDF, the sort of later session as well. And we'll talk more about that. This morning, we've got news that, US President Biden will not run for another term as far as US presidentship is concerned. He's dropped out of the US presidential race, and he's endorsed Vice President Kamala Harris as the next nominee. It's interesting, and we've been sort of discussing this, that the pressure on Biden is kind of building up for him to, because of health reasons, etc., for him to step aside. There was a recent sort of bit of polling which was done by APNORC, which found that Harris's favorability with American voters is similar to Joe Biden, although she's less unpopular as compared to Biden. I mean, again, I think a lot of commentary, a lot of sort of discussion would be what the market implications of this is. But if you just looked at what the S&P futures were doing this morning, once that news broke, nothing. I mean, they were up about 10, 12 points the last I checked. So this was expected. I mean, on Friday, we were saying that something is expected by the weekend, and it has indeed come through. This is the close on Friday, though, for Wall Street. S&P down 3/4, Nasdaq down about 0.8%. Yields were up 4 basis points on the 10-year. Dollar index went up about 1/4, and Brent prices fell about 3% or so. Again, in terms of if you're looking for one reason, one reaction, you won't find one. US and India have been the best performing markets, and you're basically seeing a little bit of unwinding from overextended positions. You have the core PCE data this week in the US, which will be very important. And you also have earnings. 35% of the S&P market cap will report numbers, including 3 of the Magnificent 7 companies. Tesla, Microsoft, and Google will be reporting. So I think it will be pretty important to track. Now, just to come back to the levels here, I think the advice is what I said on Friday morning as well. Step aside because, you have I think, again, the color is red this morning. not just because of global reasons, which clearly are indicating further pressure, but also because we've broken some moving averages. So for the Nifty, the important support is the 20-day moving average, which is about 150 points away, 24,214. I think if you get a 100-point kind of cut, you'd be starting to wonder if this goes. Nifty Bank is already below its 20-day moving average, which is 52,453. So keep an eye out on that one on the ups. I mean, basically, as long as you stay under it, and the 20-day moving average in the short to medium term can mark reversals. Not always, but this is also happening at a time when we are going into the budget. And budgets themselves, go back the last 15, 20 years, have marked a bit of a turning point, a turn as opposed to whatever the trend has been prevailing before the budget. That complicates matters more than anything else. Both the mid-cap and small-cap indices are also below their respective 20-day moving averages after the sell-off that we saw on Friday. So the advice is same, step aside, let the budget event pass, and then I think the market will find some semblance of stability one way or the other, and then we can take a fresh call. The economic survey today, and of course the union budget tomorrow. GIFT Nifty will indicate what the opening is looking like this morning. It's 142 points straight off, as far as that is concerned. So it's pressure once again, not just because of global reasons, but because of some pre-budget nerves as well. Sonia.
Absolutely. So I think two main reasons why the market could be under pressure today. One, of course, is the way the global market has sold off, right? Yeah. And the other is some of the large caps like Reliance and HDFC Bank have not delivered numbers in line with expectations. In fact, there has been weakness across both these top earnings, and hence that could put some pressure on the markets today. But on that subject of, what's happening with the US presidential elections, now perhaps there are higher chances for the Republicans, right? With Kamala Harris coming on board. At least that's what the narrative is, purely because of, I think Harris's popularity also dipped after the genocide and, all of that talk there. So let's see what happens with Donald Trump. The latest statement that he made is that it's easier to defeat Kamala Harris than Joe Biden. So very interesting, events taking place there. But for our own markets, the US markets were under quite a bit of pressure actually on Friday. So keep that in mind. Reliance will be reacting to its earnings today, and my expectation is that the street could react negatively because the oil to chemicals business was on the weaker side because of macro concerns. There are some brokerages that have scaled down their estimates as well. Although Geo and the retail business was stable, but because of weakness in the oil to chemicals business, the stock could be under pressure. Remember, the stock has also gone up 15% in the last 6 months. The other reaction will come in from HDFC Bank and Kotak Mahindra Bank. Over there as well, there are some brokerage downgrades. JP Morgan, in fact, this morning has downgraded HDFC Bank to a neutral, cut its target price to 1,700 and said that there are expectations of weaker loan growth for HDFC Bank. So I reckon there won't be any support either from HDFC Bank or from Reliance, and hence that could put the market under a bit of pressure. There's the union budget tomorrow, so all eyes will be on that. Although I do feel that a lot of the positive surprise that could come because of the higher tax collections, higher dividend from the RBI, all of that is perhaps priced into the market. Now the market is a bit on the back foot because of weakness from the Globe as well as from Reliance. But a lot of numbers this week as well. There's HUL, there's Axis Bank, Ashok Leyland, DLF will be reporting their earnings this week. So we pretty much have our hands full, but looks like it's going to be a weak start.
Well, that's right. Some nervousness going into the budget event as well. And also Friday's trading session was a rather weak one. But one positive that stood out for me was the FI flows. And that's returned. And in fact, the Indian markets are getting a larger chunk in terms of those flows. That's why, if you look at it for the last week or so, we got roughly around $600 million odd, while other emerging markets, well, they in fact saw outflows. Taiwan, notably out there, more than $5 billion getting pulled out of there. So the FI flows, they're good. And mutual funds, the liquidity they're sitting on as well is quite good. So put both those factors together, I don't expect a very, very large cut in the Indian markets, irrespective of what happens. What about the FIs? So what do they do in the F&O market? They unwound some long positions. So part of the fall could be attributed to the unwinding of long positions ahead of the big event, though the short positions now have moved up marginally to around 21% odd. And if you look at it in absolute terms, the FI net long positions had moved closer to around 4 lakh contracts odd. That's come down a little bit to around 3.58 lakh contracts. The client positioning, that's been on the short side, but they've covered some shorts actually. If you look at it from the start of this series, it was closer to around 3 lakh contracts. The short positioning has now come down to around 2.1 lakh contracts odd. What about the options data? Well, the options data, we did see some bit of call writing at higher levels. 24,700 call, that saw a fair bit of addition. And the 24,500 put as well. which brings us to the levels. The 20 DMA is very important, closer to around 24,200. The options data suggests that support is in this vicinity of around 24,250 to 24,300, while the recent high, that becomes the crucial resistance mark at around the 24,900 odd. The Nifty Bank as well, that ended marginally below that 20 DMA that it was supporting for a bit. If you look at the options data, well, there is a support zone at around 51,750, 51,800. Just a few sessions ago, we went down to around 51,750 odd. So that mark becomes important. The start's in the red. Let's see whether or not at some point of time we see an intraday recovery. I think around that 24,250 mark on the Nifty, that becomes extremely important level that we hold out, which gives the chances of a bounce a little bit more.
All right, Nigel, thanks a lot for that. So very helpful there. Lots to watch out for today. But very quickly, let's get you some opinion as well. Vikas Jain of CLSA says that their proprietary India Bull Bear Index points at a 92% bullish investor sentiment, the highest ahead of any budget in at least 15 years. He says such an extreme sentiment reading along with stretched valuations makes the market vulnerable going into the big event. He says after a huge 54% rally in 8 months preceding the election results, Modi's stocks have been flat since when other stocks have risen 12%. He fears elevated expectations from the budget is causing disappointment across a large part of the market. He says they have adopted a low beta strategy for CLSA's India-focused portfolio and recommend investors to actively reduce risk going into the budget.
All right, well, that's the equity view. Well, let's get you some money market views as well. This is on the rupee. B. Prasanna of ICICI Bank says the resilient consumption data in the US showed a bumpy path of slowdown in the economy and halted the slide of the dollar. Rupee weakened slightly, but within a narrow range as RBI continued to accumulate reserves against inflows. This week, the currency market will get used from the US PCE data and election-related news. For this week, Prasanna expects the rupee to trade in a narrow range with slight weakening bias between 83.55 to 83.85 to the dollar.
And on the bonds, Prasanna says that globally bonds consolidated in absence of fresh triggers. Back home, all eyes are on the upcoming union budget, where expectations are for an increase in revenue expenditure, capex and marginal fiscal consolidation, along with reduction in the borrowings via T-bills. Core liquidity has been improving on the back of forex flows, inducing steepness in the yield curve. He expects a positive momentum to continue with the benchmark 10-year yield likely to trade in a range of 6.9 to 7.05%.
Well, we have a lot of stock-specific action to track for you. We'll get to that in just a bit in our special Top 10 segment. But let's highlight the stocks we're looking at. HDFC Bank, JSW Energy, Patanjali Foods, Poonawalla FinCorp, all of them will be reacting on the positive side, while on the flip side, you have Reliance Industries that will be reacting to negative news flow, Wipro, JSW Steel, Kotak Mahindra Bank, Indian Hotels and ICICI Lombard.